Hi, traders! Have you ever felt that rush of adrenaline when you see a stock or your favorite trading pair price soaring? That urge to jump in now before you miss out? In the fast-paced world of trading, it's easy to get caught in what I call the urgency trap. How many times have you rushed to jump quickly into a trade, but a few minutes later, you see the same trade goes against you? Do you still remember the day you clicked a buy or a sell because someone else told you that an asset is about to go to the moon, but only to see the opposite happen? Well, what if I told you that the single most powerful tool you can develop as a trader isn't some complex algorithm or secret strategy that can make you millions or billions of dollars, but something far more fundamental, which is patience? Today, we're going to delve into the wisdom of a man who has mastered the art of patience in investing, the legendary Warren Buffett. Now, you might think of Buffett as a long-term investor, not a day trader glued to charts. But the principles he lives by, the very foundation of his incredible success, are directly applicable to your trading journey, no matter your time frame. In fact, I'd argue that understanding and implementing Buffett's patient approach can be the key to unlocking consistent profitability and avoiding those impulsive, emotionally driven trades that so often lead to losses. Anyways, if this is your first time on our channel, please subscribe and turn on the notification so you don't miss any other videos again. Let's get started. Warren Buffett's secret number 1: investing or trading are about the long-term game. Buffett famously said, and I quote, "The financial markets are just devices for transferring money from the impatient to the patient." Let that sink in for a moment. He's not talking about being slow or missing opportunities. He's talking about having the discipline to wait for the right opportunities, the ones where the odds are heavily in your favor. Think about it. Buffett holds on to his investments for years, sometimes decades. He's not fazed by short-term market fluctuations or the fear of missing out on the latest hype. His focus is on the intrinsic value of the businesses he invests in and their long-term potential. One of Buffett's most insightful analogies is about baseball. He says, "There's no rule that says you have to swing at every pitch." Imagine a baseball hitter standing at the plate. They don't just wildly swing at every ball that comes their way. They wait for their sweet spot, the pitch that they are most confident they can hit hard. Trading should be the same. You don't need to take every trade that presents itself. You wait for your pitch, the setup that aligns perfectly with your strategy, your risk tolerance, and your analysis. Impatient traders swing at everything, often striking out. Patient traders are selective, increasing their chances of a home run. Secret number 2: understand the costs of impatience in trading. Let's illustrate this with a common trading scenario. Imagine a stock has been trending upwards for a while, and suddenly you see a slight dip. An impatient trader might jump in immediately, fearing he's going to miss the continuation of the uptrend. But a patient trader would wait. They'd analyze the reasons for the dip. Is it just a temporary pullback? Is there fundamental news that could signal a reversal? They'd wait for confirmation, for their specific entry criteria to be met, rather than acting on impulse and potentially buying into a falling knife. This waiting, this deliberate inaction, is a hallmark of Buffett's approach to trading and investing. A lot of beginner traders are full of impatience. They don't want to let go of any pip in the market. They want everything now. Buying Lamborghini, Ferrari, and fancy clothes are in their heads. And as a result, they end up in this endless cycle of making mistakes that often wipes out their capital due to some slight market corrections that, my friends, is called impatience. In trading, what will make you throw away your hard-earned money helping other people buy their Lamborghinis is just your impatience. All those shining objects in your mind are not your friends at the beginning. They are your enemies that lead you to be making impulsive decisions. Unless you learn how to take correct action following your trading strategy, your trading plan, and your risk management rules, the market will always crush you. There is an old saying that patience is power, and the more patient you are as a trader, the more you set yourself free for better available opportunities. And I know you don't really want to make trading decisions that would quickly wipe out your capital, only to later see the market moving to your predetermined direction with regret. Be very selective about what you call opportunities in trading, and most importantly, learn to let go of unrealistic expectations. Warren Buffett is best known for his frugality. He purchased his house in Omaha, Nebraska in 1958. He bought the home for $31,500. Buffett has lived in the same house for over 65 years. He doesn't wear fancy clothes or wristwatches, nor does he even use an iPhone or iPad. That is why he is known as the world's richest investor. I am not saying you need to live like Warren Buffett, but delaying gratification can help you build wealth faster than trying to buy stuff to impress others. Patience, patience, patience. That is the real father of every success story I have read about. Secret number 3, the power of compounding. Time is your ally. Buffett understands the incredible power of compounding. He doesn't just look for quick gains. He looks for solid, reliable returns that can grow exponentially over time. In trading, patience allows your winning trades the time and space to develop. Instead of constantly taking profits prematurely out of fear or closing losing trades impulsively, a patient trader lets their edge play out. They understand that a series of well-managed, profitable trades, held for an appropriate duration, can lead to significant compounding of their capital. Impatience often leads to cutting winners short and letting losers run, directly hindering the power of compounding. How impatience hurts your trading. Think about the psychological impact of impatience. It often leads to FOMO, fear of missing out. Jumping into trades without proper analysis just because you see others profiting. Emotional trading, making impulsive decisions based on fear and greed rather than logic and strategy. Overtrading, taking too many trades, often with lower probability setups, simply because you feel the need to be constantly active. Chasing losses, trying to quickly recover from a losing trade by taking on more risk, often compounding the initial loss. All of these are the antithesis of Buffett's calm, collected, and patient approach. Secret number 4, understanding the business or the underlying asset. Warren Buffett once said, "You should never invest in the business you can't understand." And that is very true. He emphasizes understanding the businesses he invests in. He reads their financial reports, understands their competitive advantages, and assesses their long-term prospects. While as traders, we might not be holding assets for decades, the principle of understanding what you're trading is crucial for developing patience. When you have a solid understanding of the underlying asset, whether it's a stock, a currency pair, Bitcoin, or a commodity, and the factors that influence its price, you are less likely to be shaken out by short-term volatility or react impulsively to market noise. You have conviction in your analysis and are more likely to wait for your targets to be reached. Practical tips for developing patience in trading. Actionable steps. So, how can you, as a trader, Cultivate this crucial virtue of patience. Here are some actionable steps. Number 1. Develop a well-defined trading plan. A clear plan with specific entry and exit criteria reduces impulsiveness. When you know exactly what you're looking for, you're less likely to take premature trades. Number 2. Set realistic expectations. Understand that consistent profitability takes time and effort. Don't expect to get rich overnight. This will help curb the urge to chase quick gains. Number 3. Focus on process, not just profits. Concentrate on executing your trading plan diligently. The profits will follow if your process is sound and you are patient. Number 4. Reduce chart watching. Constantly staring at price charts can induce anxiety and lead to impulsive decisions. Set alerts for key levels and step away from your screen. Number 5. Journal your trades. Analyze your past trades, paying attention to instances where impatience led to mistakes. Learning from these experiences is crucial. Number 6. Practice mindfulness and emotional control. Develop techniques to manage your emotions, such as meditation or deep breathing exercises. This will help you stay calm and rational during volatile market periods. Number 7. Start with longer time frames. If you struggle with patience, try trading on longer time frames initially. This naturally requires more patience as trades take longer to develop. Number 8. Size your positions appropriately. Trading with smaller position sizes can reduce the emotional impact of individual trades, making it easier to be patient. While Warren Buffett primarily focuses on long-term investing, his core principles of patience, discipline, and understanding the underlying value are timeless and universally applicable. Whether you're a swing trader, a day trader, or a long-term investor, cultivating patience will undoubtedly enhance your decision-making, reduce emotional errors, and ultimately increase your chances of success in the market. In conclusion, the patient trader wins no matter his trading style. So, the next time you feel that urge to jump into a trade without proper analysis, remember Warren Buffett's words. Remember the baseball analogy. Remember the power of compounding. Developing patience is not about being passive, it's about being strategically active. It's about waiting for the right pitch, allowing your winners to run, and avoiding the costly mistakes that impatience often breeds. Embrace patience, and you'll unlock a powerful advantage in your trading journey. What are your biggest struggles with patience in trading? Share your experiences in the comments below, and if you found this video helpful, please like, subscribe, and hit that notification bell so you don't miss out on more valuable trading insights. Love you and love trading. Thank you.